What if I told you those clean highs you keep seeing are not resistance at all? What if they're bait engineered by institutions to trap retail liquidity? In this video, I uncover one of the most deceptive setups in smart money trading, phantom peaks, where structure is just a shadow and the real move is still loading. Now, what's the phantom peaks breakout model? It's a multi-phase model based on the illusion of bullish structure. Price appears to consolidate upward, forming a series of relative equal highs, giving traders confidence in a breakout. But what's actually happening is this: each high is drawing in more buy-side liquidity. Smart money is accumulating beneath, using shallow pullbacks into bullish fair value gaps. Eventually, price explodes through the highs, not to break out but to harvest liquidity and expand. So, how do we actually identify the phantom peaks in real time, and which components have I used for my entries and exits? The first component is a fair value gap. A fair value gap is a 3-candle pattern which represents an area of inefficiency or unfilled orders in the market. In this trade, we relied on a bullish fair value gap to act as support as price made its way towards breaking above the initial balance high. Now let's move inside this 1-minute chart in order to highlight the second component, an order block. A bullish order block is the last down candle before a strong bullish move that breaks structure or creates an imbalance. In this trade, we relied on a bullish order block to act as support as the price traded inside this series of red candles before showing displacement and a change in market structure. Now let's break down the phantom peaks model step by step. Price starts to climb slowly, creating a series of equal or almost equal highs. To most traders, it looks like a classic consolidation, a base for a potential breakout. But in reality, it's a trap being built, one level at a time. Each time price taps those highs, more and more orders stack up above. Think buy stops, breakout entries, and retail stop losses. This is the bait, and the more it builds, the more tempting it becomes. Now, here's where it gets interesting. Price pulls back, but not randomly. Shorts take control and add to their positions while the price retraces. These retracements dive into precise zones of imbalance, bullish fair value gaps. This shows smart money is likely entering, building long positions while everyone waits to profit on their shorts. Then comes the move. Price suddenly sweeps all the highs, either with a sharp wick or a strong candle close. It grabs all the liquidity, takes out the trapped traders, and then launches into a clean expansion. Alright, now let's jump into the live footage where I'll walk you through my entry, stop loss, and take profit using both the 1-minute and 5-minute charts. You'll see how all the pieces we just covered come together in a real profitable setup. After a final retracement into the 5-minute fair value gap, I'm searching for an entry on the 1-minute chart. Once price shows signs of bullish intent such as order blocks and fair value gaps, I place my initial buy market. My stop loss is below the low of the last fair value gap that generated the push. After the price generated more fair value gaps, I decided to add another contract. My move is confirming, thus providing more conviction. Now the market opens at 9:30 and a big candle is heading towards my target. Considering its bullishness, I decide to move my stop loss to break even. There's no reason for the price to come back down. Now it's a free trade. My take profit is resting above those relative equal highs, remember from earlier, where all those buy stops reside. With a 1-to-4 risk-reward ratio, I only need to be right 25% of the time just to break even. That means even with a low win rate, this kind of setup can still be highly profitable over time. Amazing start to the day. So 138 in the bag. Beautiful. That's the full breakdown. Would you have taken this trade? Let me know in the comments below. What would you have done differently? And if you want to catch these trades live, make sure to subscribe and turn on notifications. I stream every day at 9:30 AM New York time. Thanks for watching. Stay safe.